The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Well, hello, everybody. Welcome to the Tuesday edition of the Small Cap Roundup. It's kind of funny. This morning on Twitter, was having a little exchange with somebody. I just retweeted some article from some pension plan magazine. As you know, if you've listened to the show before, I'm always reading all kinds of stuff online, as I'm sure many of you are, just absorbing all the market information. Some of it's absolutely junk and really not worth absorbing. Others there's some interesting data in there. Not necessarily that you're going to be making a buy and sell decision, but just as some market background. So there was some article from some pension fund magazine that I retweeted this morning, and somebody responded back to me, and it was basically the gist of the article was, and it was not my article, it was just what somebody else there was writing, that small caps had been outperforming over some time frame, and then somebody retweeted back to me, yes, but when you see small caps outperforming, that can be the signal that the market's about to roll over. And I tweeted back, yes, but when you see small caps outperforming, that can also be the signal that you may be at the beginning of a new rally. And you know what? There's ways that what this other person was saying was true. If you've heard, as I've been, when I do my guest segments on Tom's show occasionally, we do talk about small caps, how those can be leading indicators. Absolutely true. When you look back at, for example, the market rally that began back in March of 2009, and if you recall, because I know that's fresh on many people's minds, if you recall, that was the situation where you had a lot of these newer, smaller companies, many of them you'd never heard of, that were among some of those early market leaders. And it's kind of funny to think about it now, because a lot of those were some of these Chinese names that are now, many of them, delisted. But you know what? It was very, very possible to ride the trend higher on those and get out when the technical signals shook you out of that. So, good argument there for the trend following. But nonetheless, you do remember that frequently you do see these smaller cap names are the first ones out of the gate. Not unusual to see that. Now, to the point this other person was making, I actually kind of agree with what she was saying about when you see a lot of these smaller cap names, some of the smaller stocks in leadership. I think, in my experience, just in the research I've done, what that seems to be, when that tends to occur, is when you see the lower quality stocks. When you see the lower quality stocks, maybe those with suspect fundamentals, such as lackluster revenue growth, for example, no earnings to speak of, something along those lines, very, very, very thinly traded stocks. When you see some of those rallying late in a market uptrend, yes, that can indicate that the bottom of the barrel stuff is rallying. Look out. So it is an interesting point that she was making, and I may get onto Twitter and talk with her a little bit more about that a little later, just because it is an interesting point, and I could talk to her about that a little bit more. She also said she does financial astrology, which I thought was pretty interesting, and might want to follow up a little bit on that. There's so many methods for getting out there and identifying what's going on, and identifying how to spot leading stocks. So a lot of interesting things out there, and as I'm often fond of saying, if you have a method that works for you, then whether it's financial astrology combined with technical analysis, then good for you. You've got something there that's working, and that's absolutely terrific. So what I wanted to do today was talk a little bit about what I have right there in front of you, the IWM, the Russell 2000 ETF. And as is typical here on the Small Cap Show, I do tend to put that chart up, and we can take a look at that at the very beginning of the show here, just kind of analyze what's going on there. Now, just taking a quick technical analysis doesn't take a rocket scientist or a brain surgeon, or a brain scientist or a rocket surgeon to to take a look at this and see, not looking so good here. I got that on a daily chart. You see that the 50-day line has been moving lower. The 200-day about to cross over the 50-day. That's not the crossover you want to see. That's not the bullish cross. And you do see, however, to cast some kind of silver lining on this chart for the bulls, you do see where you have some support there at that 50-day line. Now, I want to go over to the RWM. And this is a trade that we have. Let me make sure I get the ticker right there. RWM. There we go. This is a trade that we have previously in the Low Price Leaders newsletter. We have put on this trade to good effect. Right now we are in essentially back into trendless land. So that's really what we are at right now, is this kind of situation, and I'm just seeing all the various analysts out there who are trying to latch on to some kind of trend, and really it's somewhat interesting sometimes to see some of the backpedaling that goes on. And it's an interesting thing here. So we've got the RWM showing some gains right now. We've got the IWM. Let's go back to that one here, getting support at the 50-day. So it's obviously, if you're day trading or shorter term swing trading, is it absolutely possible to grab some profits on some of these? Yes. The problem that a lot of traders have been facing is that you've got, sometimes by the time a trend is in place after 3 or 4 days, then it tends to reverse. And you can look at the charts and you can just see that. You had a lengthier trend to the downside here in the IWM, then it reversed again. So it really has been difficult to attach yourself to anything that's of a longer duration than just perhaps a week or so at the most. Okay, so what we have here that I wanted to do today in honor of the IWM, the Russell 2000, is to take a look at some of the stocks that are components of the Russell 2000, some of the major holdings within that, and see how they're doing, because these are often the ones that when they are the bigger weightings, obviously you're going to be seeing the effects of these stocks. So let me take a look at one here, and I actually wrote about this one the other day for Real Money over at the Street. It's one that I know many of you know about. Now, one thing to point out about the Russell 2000, I'm going to put up a chart here for Athena Health, ATHN. Now, the Russell 2000 and the S&P Small Cap Index, what these do, they look at market caps at the time of purchase of under $3 billion. I tend to use the a little more traditional definition of under $2 billion at the time of purchase. And as you know from many of the fund managers that we do have on the show, that they are often, they'll make a purchase but not necessarily get out of it when the market cap moves above the level at which they will buy. So in other words, if you have a small cap fund manager who is looking at that under $3 billion threshold, for example, They won't necessarily sell if it moves up to 4, 5, 6. A lot of times they will hold it, but they might be looking at some kind of price target. Obviously, all of these guys use their valuations, and sometimes that can be very frustrating for retail investors who are trying to just hold and not necessarily use a lot of these price targets. But the institutions, they like to do this. A lot of them, obviously, I'm a little bit skeptical, not so much the mutual funds, but the big investment banks, the mega institutions who have these analysts who are out there. You know, they like to keep these analysts busy and make themselves sound smart and have a lot to do, so they'll be looking at some of these price targets. And it is the case that frequently you will see a stock, for example, in a decent bull market condition, that it will rally maybe 20, 25% and then pull back into a new consolidation. So there is some justification to that. You know, on the other hand, if you have a nice cushion in a stock, something you've purchased, and you are able to sit through a reasonable, orderly consolidation, not some kind of meltdown, obviously, then it can make sense. So let's take a look here at Athena Health. I've got that up there on a daily chart. I'm going to switch it over to a weekly. This has a market cap of about $3.3 billion. Not bad liquidity, about 512,000 shares a day on average. So you see here, this did report earnings last week. It beat on EPS, but more importantly, it raised its full-year outlook. And as you often see, that's something that the institutional investors tend to like a whole lot when that outlook is raised. So pulling back a little bit this week, not surprising, but looks very healthy. Let me move this, no pun intended there, healthcare stock, medical, software. Okay, so you see there on the daily that Athena Health is pulling back a little bit. It's actually well above, let me see here, it's above that 5-day exponential line that I tend to use a lot in these particular market conditions we've been experiencing recently, just with these very, very short-term trends. So it's possible that this one could be offering some kind of buy opportunity in the not-so-distant future. I want to go back to a weekly chart here and show you something that I like here about Athena. You got a pretty big shakeout right here. It actually did not undercut the previous low over here, but that's okay. You had a pretty big shakeout over here, got rid of a lot of the investors who were either lacking in confidence in the stock or maybe back up here at these particular price targets just didn't like the valuations anymore. So that set the stage, as you see right here, even though it didn't, by any kind of strict definition, undercut the prior low. You notice that shook out a lot of people, invited in some bargain shoppers. So we really could be at some kind of very productive juncture for this particular stock right now. Of course, we'd like to see some kind of more definitive trend one way or the other to the upside for the bulls. Okay. This first segment is over. Give me a call, 877-927-6648. Be right back.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows. Plus, see all the charts as they happen live during those shows and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, welcome back to this segment here of the Small Cap Roundup. Just want to let you know, if you have not already, please check out the homepage, TFNN.com. You can get information about a trial of the Low Price Leaders newsletter, just to fill you in on what that is. When we say low price leaders around here, we mean stocks between $5 and $12 that have solid earnings growth driven by revenue, and also some good liquidity, some good chart action. I don't want any of these thinly traded penny stocks. We're not going into that level of speculative land, but definitely want to be looking at stocks that can provide a good entry place prior to a possible run-up. I mean, we've seen this in many of these stocks start out in the single digits. In that $5 to $12 area can be particularly fertile ground. So good place to get in. And obviously, if you're talking about going long, if you have some kind of sustained trend in that direction, that obviously does help, because as we were kind of alluding to in the first part of the show today, how these smaller names perform in a new bull market, they really can be the harbingers. And when I was talking about some of those crummy, little, thinly traded names with poor fundamentals, that's not the ones that we're looking at here, okay? We're also looking at, in the newsletter, stocks with a market cap of below $2 billion, and also with these very same criteria that we're talking about here, with the earnings driven by revenue growth and some good liquidity. I'd like to see at least 300,000 shares a day on average. So that's something I'm looking for. So I understand. I want to move over to our caller here because I understand he's asking about a stock that I was actually looking at yesterday, and I'm going to put this up here. Dean Foods. I understand we have Jason from Spokane, 1230 KSBN. Hi, Jason. How are you today?
Perfect. And yourself?
Oh, doing great, doing great. Yeah, I was looking at this Dean Foods chart last month. I was looking over the weekend actually, and I was noticing yesterday this support there at that 200-day moving average. What was catching your attention about this one?
I saw that it made a bullish candle yesterday, so I got in, and then I should have waited maybe for a sign, but I'm not sure if it's going to falter or not.
Well, I'll tell you by what I'm kind of looking at here. I like the 200-day support, and it's still holding above that line, so that's a good thing. By the technical analysis that I use here, Jason, it's still premature.
Yeah,
because,
that's what I was wondering.
Yeah, I mean, I'm just kind of looking at that. You've got your 15-day moving average is above the 5-day. And I don't like to see that. I would like to see that 5-day exponential line crossing above the 15-day. And that is frequently a very reliable indicator that you're in for some kind of trend, even if it is maybe just 5, 6, 7 days or so. There's often something there you can grab onto and ride that trend higher as long as it stays above the 5-day. Yeah, I like the 200-day support. That's something that catches my attention and says this could be a watch list name. But as of now, I think it's a little premature. But you know what? You're in this. Where did you set your stop?
I haven't yet.
Yeah.
I was waiting for today. See what it was going to do. Put it in below tomorrow. Yesterday.
Where did you buy it? At what price?
61. 12.61, whatever. Yeah, so 12. I'm right. Or what? Now, whatever it was, I don't remember. I know it was 61 cents.
So 12.61 looks like it's right around there now. Let me just pull up. Last I looked there, it was 12.60. So it looks like it's right around there right now. Yeah. So you're okay hanging in there today. It looks like, but better. You know what? I tell you what. Just myself, what I would do if I had entered this one, I would probably be looking at that 200-day line, and that might be my gauge there. You'd want to see support above that one, and if it breaks support at that 200-day line, that would not be a good thing.
No, yeah, I was watching it close today, so.
Yeah, I was looking at some of these other, this is the dairy company, but some of those Monster Beverage also got support. You've seen some of these beverage makers, just in general. Some of these have been holding up pretty well. All right, Jason, thank you for calling in. Good to hear from you. Call again some other time. All right, take care. All right, everybody, so you can also call in 877-927-6648, and we'll come back. We'll look at some more of these Russell 2000 components. I'm Kate Stalter. This is the Small Cap Roundup.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, welcome back. This is the European close segment of the show. I say a little bit facetiously there, but we do have the European indexes have closed, and let's see where we have our U.S. Little bit looks like a little bit of weakness, a little bit of additional weakness in the U.S. just in the last minute or so. But as we know, as we saw yesterday, we could have our market miracle, as a friend of mine facetiously calls it, that late day reversal. Never a dull moment. Just never know what's going to happen around here. And I know it's very, very easy for me to put on my skeptical hat and just be a little bit kind of watching what happens with all the European developments. Wasn't it just a few weeks ago when everybody was jubilant because everybody thought, oh, it's okay, they've solved the problems, and oh my gosh, the problems are back now. So, I think that it's almost like the term black swan has become almost meaningless because there are just so many of these events that you could almost just predict that these so-called quote-unquote unpredictable events are going to be occurring. So, in any case, I want to go back to our look here at some of these Russell 2000 components. I had Athena Health as one of the top names there. One of the top holdings within the fund, within the Russell 2000. Let me see here, actually. When I say fund, I meant the Russell 2000 Index ETF, the IWM, which I usually start out the show putting up there. Let me just see here. I'm taking a look at the sectors in the Russell 2000. Now, despite the fact that it's interesting because some of the top holdings hail from the healthcare sector, nonetheless, the top holding is financial. So that's kind of an interesting thing with 22.55% according to iShares. So let me see here. I want to put up the ticker for WellCare, WCG. Put that one on there on a weekly chart so you can see not so bad, kind of etching the right side of that consolidation that we have. And I was just talking with our caller Jason a few minutes ago about some of these moving averages. Now, what you have right now on WCG that's kind of interesting is you do have that 5-day exponential moving average trading above the 15-day. So that's what I like to see. It's getting nice support above that 5-day right now. Actually, I take that back. As of this morning, it's about 0.1% below that 5-day. Not too bad. I still, in that range, I'm still going to consider that support because obviously intraday you can move up and down, kind of just be kind of bobbling around that line right there. So that's good right now. I'm going to call that support near that 5-day, and you've still got the 5-day considerably above the 15-day. That could be a very constructive entry point. It's kind of been the case just in some of my studies of a lot of these charts over the past year or so, that if you wait for them to reach new highs, it's a little bit late. That it's a more productive exercise to try and ride some of these trends along some of the shorter term moving averages. And of course, when that works out, it can really work out and provide a nice early entry point. Although, as has been the theme of not only this show, but probably every other market media that you've seen over the past at least 6 months or so, just the volatility is making it tricky. It is making it tricky, but nonetheless, doesn't mean you can't find some kind of trend there in some of these to get in on. So WellCare plans, let me just take a look at a weekly here. So you've got a weekly chart up there on Tiger TV. Now this one has a market cap of about $2.9 billion, good liquidity, about 1 million shares a day. Now the problem with this one, potentially, is that we're seeing some decreases in profitability expected over the next 2 years. Now the reason I say potentially a problem is because even though that's not something that's going to come up on my screens when you're seeing these expectations for lower earnings growth year over year, actually it wouldn't be growth, it would be a decrease in year over year earnings. That wouldn't come up on a lot of my screens. However, if the company does meet or beat expectations, that can still propel the stock higher. So the earnings estimates are really just one indication here, and of course you did see a lot of these. You saw all the gyrations in the analyst expectations that occurred around the time of that Supreme Court decision a few weeks back, and you saw a lot of adjustments to the earnings expectations around there. Frankly, I wasn't paying too much attention to every analyst change in what they were forecasting. I really don't follow that a lot on a day-to-day basis. And sort of as an aside, when you do see some of these analyst upgrades or downgrades, sometimes the effects of those can be very short-lived. You might see them only have an effect for maybe a week or so, sometimes a few weeks, but very often a stock will either bounce higher pretty shortly after a downgrade or pull back pretty shortly after an upgrade. So it's not always, you hear about these a lot on the media, but then you don't always see the follow-up to what happens to the stock over the next few sessions, that the effects of that tend to go away. Okay, so that's WellCare reports on August 3rd. I believe they've confirmed that they are going to issue their next quarterly report on August 3rd. So let me go to another holding there in the IWM I wanted to talk about. And this is one that I did. It's DRQ Drillquip. And as I mentioned earlier in the show, as many of you know, I do write for Real Money over at TheStreet.com. I did notice on his CNBC show, Jim Cramer was talking about this one recently, and a lot of times a stock will get the Cramer bounce. If he talks about it, you often see a rise in the stock price on that basis. So what we're seeing here, again, I've got this on a weekly chart there for you. It's a little sloppy when you look back over the past few months, what's been happening with this particular stock. Now, this current consolidation is actually a little bit more orderly than what we saw prior to this, okay? You see, this was a big mess back here. And Drillquip, as the name sounds, they manufacture equipment for the oil and gas industry, for offshore drilling, deep water drilling, a lot of very specialized equipment. Now, this company is one, it did see a decline in earnings in 2011. So you did see as well, of course, as you'd expect, some year-over-year quarterly declines. We've seen the revenue growth in 2011 was also, let me see here, we also saw the revenue decline. Now that appears to be turning around. We've had 3 quarters in a row of increasing rates of revenue growth. We saw the last quarterly report, the company earned 71 cents a share. That's 31% year-over-year growth. Drillquip reports on August 6th. So this one has a market cap of $2.9 billion, moves about 420,000 shares a day on average. So again, some pretty good liquidity. And let me just take a quick look here. I'll tell you a little bit about what we're seeing here. I'm going to put this up here on a daily chart for you. So take a look at where, so this one too, this is just as of today, it's a little bit below that 5-day exponential line, holding nicely above the 15-day. So when we did see, this is one, so you can see it right up here. If you look carefully, you see that price action yesterday, that it kind of behaved in tandem with the market. It had some of that, a big pullback, and then rallied higher, actually finished up very close to its session high for the day yesterday. So kind of, you see that Drillquip really was a reflection of how the general market acted, with some of that whipsaw action and then finishing kind of up near the top of that trading range. Okay. This is nice support near that 5-day line. I just like to see a little better confirmation from the market. And as I'm looking here, I mentioned when I began the segment a little more weakness. Yes, we are seeing quite a bit more weakness right now following the European close, but who knows? Can't make any predictions, not that I ever would, about how the market will close today. I love these let's call the close contests that people have. It's I guess it's fun. I think it's fun. It's just a little bit of a game, but really doesn't much matter when anybody thinks about that. It's going to do what it's going to do, and right now the selling pressure and weakness does appear to have returned, so a lot of the holdings are pretty tricky right now, but I do like what we're seeing on Drillquip. Let me see here. I want to go to another one that I've talked about before. This is PCYC Pharmacyclics is this particular stock, and this one's come up. I've shown this chart before. This is obviously, as the name suggests, it's a biotech. They develop small molecule cancer treatments. Now, this is one of these biotechs that it is expected to be profitable this year, but then expected to show a loss again in 2013. You know, a lot of these biotechs, even though this one went public back in 1995, so it's been a public company for quite some time, but nonetheless, they can show quite successful technical uptrends, even in the absence of some of these typical fundamental metrics that I tend to look at, some of the revenue growth in particular as a driver of the earnings growth. And you know what? The biotech industry is just a beast all unto itself in that sense. You know, I know hedge fund managers who just won't even invest in that particular area just because they don't know it well, they're not comfortable with that. And you know, that's perfectly fine. This really does have some of its own rules. Obviously, you can see some huge price swings in some of these names, one direction or the other. If there is, for example, some kind of disappointing clinical trial result or some extraordinarily optimistic clinical trial result. And, of course, these are frequently viewed as acquisition targets. Now, this one kind of interesting because it's been around since 1995. That's as a public company. That's older than many of these biotechs, these unprofitable biotechs that we do see. But nonetheless, a lot of them are viewed as acquisition targets, so you often do see investors holding on to shares on that basis. Now, this one, the chart looks pretty good. You see there on a daily chart holding up nicely above that 50-day line. And let me go back to a weekly over here so you can see a nice gradual consolidation on the weekly. It's holding above the 10-day average. Looking pretty good on this one. This has a market cap of about $3.4 billion. And again, some outstanding liquidity, 1.4 million shares traded a day. This one is not yet confirmed an earnings date, but probably sometime in August this one will report. It looks like probably it's estimated that it will report in early August. We have a couple minutes here left in this segment. So I want to go to another healthcare name, and it is interesting to me that so many of these various subsectors of healthcare are so strongly represented right now as major components of the IWM. So looking here at Cubist Pharmaceuticals, and this is one you could see, I've got it on a weekly chart on Tiger TV, you can see that it had a nice run-up in the prior couple of months, 2-3 months back here, rallied up to a new high. Now it's consolidating. It did pull back below its 200-day line. I'm going to put this up here for you on a weekly chart to see. So you had a little bit of a, let's see what we've got here on this one when it comes to some of these moving averages. You know, this is a stock that tends to get a lot of attention, so I'm going to come back and finish up with this one after the break, and we'll just take a look at where it's at relative to some of its key moving averages, and then I'll show you a couple more names from the IWM and get a better sense of maybe why the overall ETF is trading the way it is. Okay, I'm Kate Stalter. This is the Small Cap Roundup.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question, are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of tfnn.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this. Today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back. Last segment of today's Small Cap Roundup. Just devoting a little time today to the Russell 2000. I like to kind of get under the hood of these ETFs, these indexes, every now and then, and just see what's really going on. One thing that was very interesting to me, because I really haven't done this in a couple months, it was just interesting to me was the degree to which some of these healthcare-related names are some of the largest holdings right now. So, and of course, these are very small percentages we're talking about here. I think Athena Health is about 0.3%. Then you've got welfare. Why do I keep saying it that way? Wellcare Health. Freudian? I don't know. I have no idea. I think it's just me not being able to say that word right, I think is all it is. Wellcare Health is at about a little less than 0.3%, 0.26. Drillquip the same. Let's see, I talked about pharmacyclics. I skipped HMS Holdings. And I was just wrapping up a little conversation about Cubist Pharmaceuticals, which is one you hear a lot about, but frankly, it's not. And the reason I think that is, and let me put this back up here on a weekly, is because its prior performance in the past few months was pretty good. So I think even as it's consolidating, it's been one that folks have been watching. So right now it's trading just about even with that 5-day exponential line. Actually, yeah, just about even with that, maybe a little bit below. And that's the 5 days holding above the 15-day. So that's just a gauge for me to see if indeed there is some shorter-term strength that could bode well. The company reported earnings last week after the close on Thursday, and it had some strange action there on Friday, pulling back, but then finishing with a gain. So there you have it. That's Cubist. But even after reporting earnings, you're seeing that really did not have any not longer term, but over the past couple days did not have the effect of sending the stock higher. Okay. Want to move on to a utility. And as you can imagine, actually I typed in the company name there, not the ticker. The ticker is CNL, and this is a utility down in Louisiana, Cleco, I'm not sure how you pronounce that, but I have seen this stock before. And again, this is not really one you hear about, I suppose, unless you're in that region and they're your utility provider, your electrical provider. But this is kind of an interesting stock. It's pulling back today. It's down about, let's see, about 0.8% today, near the bottom of its daily trading range right now. You know, utilities not typically going to pop up on my screens because I tend to look for some of these names that do show the big earnings growth. But of course, if you're a dividend investor, this has a yield of 2.9%, market cap of about $2.6 billion, moves about 383,000 shares a day. You know, this one's been a pretty good performer. And if I put this up here, I'm about to wind up the show, but I've got time to show you here on a daily chart. So you see it's holding up nicely above that 50-day line. So this is a dividend, obviously, being a utility, a dividend player, and holding up nicely above the 50-day line. So could be an interesting one to watch. This is another one of these considerable holdings within the Russell 2000 right now, about let's see, a little less than 0.3%. Okay, that is a wrap for today's Small Cap Roundup. I'm Kate Stalter. Check out the low price leaders, tfnn.com. See you Thursday.